Hello, 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 everyone. How is everyone doing? Happy turnaround Thursday, as we called it this morning. Got a little turnaround move. Gonna see if some bigger or some patterns trigger on the closes of the futures, not of the stocks. Good afternoon, Patrick. The first one in again. How do you do it, Patrick? Sashi, good evening. Good evening, Luke. Charles, I want to call you Luke. Well, good evening, Charles. Hey, options 22. Good afternoon, Royal Palms. Today was interesting. So, hope everyone had an interesting day. Again, we got the little bounce with cycles heading to the bottom on the daily. This looks like it could, in the S&P, trigger a percent B buy on the futures close. The NASDAQ definitely is going to, unless something shocking happens in the next 25 minutes, also hitting the little key area here. Talked about this little double this morning, hitting the stop reduction area and going to issue a percent B buy. Is that a long-term buy signal? No, that's for a little bounce. A little bounce. So the Dow is going to be questionable whether that does it. And the Russell, there is, after triggering the sell, there's just, it's closing up today, but pretty strong price rejection there. Now, while we're waiting for Bob, we had Costco, Lululemon, which was a big gap down at one point. That was like 10% down. DocuSign was a gap up. Broadcom was pretty flat when I last looked. Restoration Hardware, I saw some announcements come out. We'll have to peek at that after Bob. So if anybody has those earnings, if they could put them in. Also, where's my economic calendar? We already went over today's because there wasn't much after that, but we have PPI. We'll get Bob's thought on PPI tomorrow at 7:30. Consumer sentiment preliminary at 9. And some of the subset numbers, which are important. And then that pretty much winds it down. Today, the market, Apple and Microsoft up pretty decent. The merger between Microsoft and Activision getting challenged by the FTC. Amazon pretty bounce up. Google was the mega cap that was down. Oil and gas integrated up. Oil and gas exploration down, though. You can see the strongest sector was technology and consumer cyclical. So it was clearly a risk-off day. Although you had healthcare holding up pretty well. 80% for that 50 basis points, still hovering between 75 and 80%. Fear and greed, still in greed. And with that, hold on, I forgot something. First off, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. I also, as Stafford, introduced the concept of the, the secret word of the day is fisticuffs. And look at this, fisticuffs. And we have some new animation. We have the duck falling from the ceiling. Did you ever think you'd see something so spectacular on a trading and investing channel? Now, Bob does not know what to say as I bring on Bob.
What the hell is a duck doing? I mean, what are you even trying to do with that?
It's the old duck falling from the ceiling trick, Bob.
I mean, I know what it is. I'm just trying to figure out what the hell you're trying to do with it.
Duck falling from the ceiling. It's cutting edge streaming technology. Get with it.
That is definitely cutting edge.
Do you know what? That's going to help us become better traders and investors.
Well, sure. I mean, if you see a duck falling from the ceiling, you get out of your fourth quarter longs.
Yeah, is that what it is? Do we now exit the longs?
We exit the longs in the S&P if you have a duck falling from the ceiling. So
well, a duck just fell from the ceiling, so what are you doing with your longs?
That was just an example.
Just an example?
Yeah. So don't get out of the longs yet.
Coco wants to know, how's your profit?
It's pretty good still. I mean, how can it be bad?
Bob, do you live candlestick to candlestick?
I do not. Coco, would you please buy the candlestick course? It's not that much money.
Seeing Stafford,
Good.
who's on now, reiterating fisticuffs, today's secret word, in case you needed to know, Bob, fisticuffs.
What is that? What's the secret word? What does that mean?
See, you didn't, you got to tune in to find out every day what the secret word is.
And the secret word provides us with what if we know it or get it, or what's the point of the secret word?
The secret word is to know who showed up on a regular basis, because if you don't know the secret word of the day, it means you didn't show up.
I
Hello?
see. I see. Now I'm starting to follow. I'm tracking, Mikey. I'm tracking.
Well, you know what? Technical analysis has fried my brain.
Yeah, clearly.
Hello, hello. We'll see if I drop the duck. See, we can't. Now, this is the magic trick. Look, if I drop the duck, Bob's going to disappear. See? Watch. You can either have Bob or the duck on the screen at one time. I cannot. Now, is Bob the duck? Are you going to say what the duck?
I just calculated my profit on the ES so far, and I'm still at about 9.05%.
9.05. Are you going to risk that as 0.5% though, or to stay in this market?
I'm going to get out just because Coco keeps asking me if I got out.
Then you won't have to answer the questions anymore.
Right.
So that's worth taking profits right there.
Sterling won't have to yell at him.
All right. Well, we've had a little fun here. John Bob, did you hit your target on oil, and are you bullish now?
I don't think we hit it. Remember, I wasn't actually short it. Though I just had a target. I never got into an oil short. It was just something to say was the target. So I don't look at it all that. Well, I mean, I look at it every day just to see what's going on. No, we have not hit the downside target yet, which was about 69. I've got a low of about 71.
When we hit my cluster area, by the way, we've also invalidated the potential double top, but we've hit the next cluster area. I talked about it 71 roughly. Roughly 71.12 was the low. The target to complete the weekly double, the second target is 69.87. So still a little ways to go on that lower. Let's see. What did I miss? Something? Hey, I have to say hello to George. Does the Fed still follow the PPI instead of CPI? Is that what we're watching
for? Never followed PPI. They follow PCE.
Yes. Would you want to go over just for because we have CPI coming out Tuesday before the rate announcement. We have PPI tomorrow. For anybody newer here, do you want to cover them real quick and what the order of importance is and how it relates to PCE?
Sure. So these things, obviously, like what's important and what isn't important shifts, right? So, for example, I will tell you now that year over year, CPI barely matters at all. Because if you pull up, and I don't know if you want to pull it up or not, Mike, it doesn't matter to me. If you pull up the consumer price index from the Fed's website, St. Louis Fed's website, Fred, you'll see that we're about to experience base effects, meaning that a year ago, so year over year means if we get a year over year number that's released in December, it's coming from last year, December, right? So year over year, we're looking at basically a number that was already elevated. And if it doesn't continue to elevate at the same rate, the year over year number is not going to be substantial. It's not going to look significant. So year over year, CPI almost doesn't matter anymore, while it mattered before because it was showing the drastic change. It was showing the rapid appreciation of inflation, okay? But it doesn't matter as much anymore. Second least important would be month over month PPI and year over year PPI. I would put those two in the same category. And why would they be less important? Well, number one, PPI is often released after CPI now. That's not the case this month, but it often happens. So it's usually just a confirmation of whether or not manufacturers and producers of products have pricing power. Okay. So if producer prices go up, but consumer prices do not, it means there's a possibility for profit margins to shrink. Possibility. Doesn't always happen. Sometimes they earned extra revenue elsewhere, extra gross profit elsewhere, and they just don't pass it on to the consumer. That's what was happening for most of the 2000s. Let me rephrase that. From about 2007 on. Okay, the companies had no pricing power and they weren't passing it on. Now they have pricing power. Everybody's raising prices, so everybody's raising prices. In other words, there's not all this competition where Amazon and Walmart are keeping prices low, so Target doesn't have to keep prices low. They're all raising prices because the input cost increases were so dramatic. Next most important would be the month over month CPI, or I should, well, we'll go from that. Least important is year over year CPI. Then the next most important is PPI, both month over month and year over year. Then it comes to month over month CPI, because that's what's actually affecting the view of the Fed as to whether inflation is moderating on a month over month basis or not. Okay. So that would be the next most. The most important now is month over month core PCE, the personal consumption expenditures. Year over year PCE matters more than year over year CPI does, but it's also experiencing base effects. The most important inflation indicator now is the month over month PCE. First of all, consumer price index is a basket of goods. Okay, the government has put together a basket of goods that they think is most representative of all prices. That's why you saw Social Security go up a little over 8% last year, because it's going off of last year's CPI bump. PCE is everything that's sold, personal consumption expenditures. How much did people personally consume? So if in the CPI, there's, let's say, chicken, and all of a sudden there's a movement to stop eating chicken because there's avian flu, okay? And chicken prices drop dramatically. CPI will be affected by that. But if people are stopping the purchasing of chicken and instead purchasing soy, which is not in the CPI, okay? Silken tofu, all right? That would be reflected in the higher prices in the PCE, but not in the CPI, okay? So PCE is much more a representation of what people are actually spending their money on and what's happening in those prices. So that's the order of everything. Mike, I sent you a couple of
I got
pictures.
them. I'll bring them up in 1 second. Which one do you want up first? While I say hi to Michael, Anthony, and hello, Gary the golfer. Which one do you want up first, Bob?
Let's take a look at the. Well, there's one more. Let's take a look at the ADP, private payrolls versus non-farm payrolls.
Okay.
So one of the narratives
This
that's
one?
out there, yes, one of the narratives that's out there is that jobs are still strong. Okay. And I could have sent you this chart as well, Mike, but I didn't get it ready. We have 9 consecutive weeks of higher continuing jobless claims. And we're at about a 3 or 4 month high on continuing jobless claims. Okay, that is a very, very reliable recession indicator, is increasing continuing claims. It's one nobody talks about, but it's more reliable than yield curve inversion. I would argue that when the two of them are together, we have a convergence of factors, Mike. So your trade should be bigger that we're going to get a recession. I'm kidding. Continuing claims is a very good inflation recession indicator, and it's risen 9 consecutive readings in a row. All right. This particular chart shows you the difference between the household job survey and the non-farm payrolls number. Most of the time, they are within a range of each other. They've gone to almost a record difference. The only bigger difference we've ever seen to the negative, meaning non-farm payrolls has more jobs than private payrolls, is the pandemic. That's the only time ever. Now, when you take a look at continuing claims, and then you take a look at private payrolls, and then you take a look at non-farm payrolls, which one is incorrect? When I break down the non-farm payrolls, I would argue that that's probably the one that is misrepresenting the jobs market right now. And the reason I say that is because in breaking it down last month, we saw a 30,000 job contraction in retail coming into the holidays. I've never seen that before. So it means to me that they've made some seasonal adjustments during the pandemic that they haven't reversed or corrected, or their seasonal adjustments are all completely off, or the numbers are just a mess. One of those three things. So I now believe the jobs market is, let me rephrase that. The employment situation is weaker than the market is showing when they look at non-farm payrolls. I now believe that. Let's pull up that manufacturing PMI. We all saw the speech by our very young and with it President Joe Biden, talking about how manufacturing is back. Does this look to anyone like manufacturing is back? This is the Purchasing Managers Index covering manufacturing. Look at the downtrends in this particular set of data. Yes, not one lower than the other, but you had a slight uptick this past month, which is when President Biden said manufacturing is back. I don't know where the hell it's back because it's not in the PMI. And PMI is also very reliable. And you see the same kind of thing across the globe in the PMIs, especially the manufacturing. Now, services PMI had a pretty big bump into expansion territory last month. But services is also where inflation is sticky. Okay. Services costs are where they're rising.
Bob, I fixed it.
That's the services one.
No,
No, I'm kidding.
I just flipped I just flipped the other chart upside down.
Now it
It's
looks like it's
fixed.
right. Yeah.
See?
Also, the price components in these are dropping as well, but not in the services. Services PMI price components are rising. So I have decided there is a 117% probability of a recession.
117?
Yes, it's
Hold on.
117.
Wait. Well, hold on, Bob. Hold
Yeah.
on. According to Coco, Yellen said the U.S. can avoid a recession given there's no wage price spiral and supply chain bottlenecks are starting to ease. So you're in direct contradiction to Yellen.
Janet Yellen apparently believes that the only causes in our history of recession are a wage price spiral and a supply chain problem, which of course is not the case. As a matter of fact, I would argue that a wage price spiral has only caused a recession one time. It was in the 70s. So that's an idiotic thing to say. And she says that to people who are idiots and they listen.
You feel all right? Well, that pretty much laid it out. By the way, you have Hashim. I guess you're talking to Bob, sir. I am your big fan. Hi, Dr. M.
Hashim, how are you, buddy?
Let's see. What else do we have? Hey, we got. Let's see. I'm changing my last name to Costanza. Every instinct I have right now is wrong, so I will be doing the opposite from now on.
That's one of the funniest scenes ever of, honestly, one of the funniest scenes ever of Seinfeld is when he walks up to that woman in the coffee shop and he's like, "Hi, I don't have a job and I live with my parents." She says, "Hi, I'm Victoria." That's freaking awesome. So I don't know if Hashim said "not you" or "and you." I'm not sure what he's saying there. I said, "Hi, Hashim, how are you?" And I think he said, "Not you, I mean Mike."
No, Hashim, today I can make tremendous amount of money. Well, there you go.
Well, I hope it's like selling shoes or something. I don't know.
So we got, all right, what are your thoughts on PPI then tomorrow? Because was that an espresso?
Yeah,
All right, just making sure.
full calf.
Full cap. All right, so
Yeah.
what are your thoughts? Is it going to have any impact on the market?
No, I don't think so. I mean, it would have to be a dramatic producer price input, and with manufacturing collapsing the way it is. Remember, services don't really have a producer price, right? I mean, what are the products that go into services businesses? There are some, but there certainly are not as much as there would be in manufacturing. So if manufacturing were stronger, I would say that it might matter, but I don't think tomorrow's PPI is going to matter at all.
Paul says, Bob, you remind me of Stallone in Tulsa King drinking his espresso.
I never saw Tulsa King. I'm a pretty big Stallone fan.
There you go.
Now I know what I got to watch next.
Bob, now with a recession looming and inflation seemingly to markets coming down, does the theory of equities rallying in a recession, no stagflation, make more sense now?
Well, Pavneet, it always made sense as long as inflation is under control. The new theory that I'm positing everywhere is that the only way for the Fed to cut rates as the economy shows slowing in all areas, which would mean it only has to get into non-farm payrolls because it's showing slowing everywhere else, is the Fed is going to raise their inflation target. That's my new theory. They're going to come out about 8 months from now, 9 months from now, and say recent wage gains have convinced us that our inflation target can now comfortably be at 4%. That's what I think they're going to do.
Permanently?
Yeah, yeah, I think they're going to do that. I don't know if I can send you this, Mike, or otherwise I'll just read it. I got one more thing for you guys.
You can send it
I
to
don't
me.
know where it is. I don't even know where I was. Inflation dropping from where it is to 2% has happened in the past. On average, it's taken between 6 and 20 years to have that happen. So it's not like, so if you believe they're going to cut rates, then you agree with my theory, is that they're going to say inflation is we're comfortable with inflation at 3 to 4% instead of 2. I think really it's the only way it can happen. We've never dropped inflation this much in our history without going into recession. Never.
What is the current state of inventories now for retail and manufacturing? Now will they affect the PPI number?
Say that again. What is the current state
Current
of
state
retail?
of inventories now for retail and manufacturing. Will they affect the PPI number?
No, they won't. They won't necessarily read into the PPI. That was Charles, right?
Yeah.
Um,
Yeah.
Inventories have been kind of worked off. They have. They affect GDP, but they don't affect PPI. So PPI is producer prices. So if all of a sudden a company start to rebuild inventory, but the prices haven't gone up, you won't see a move in PPI. So, but it'll affect GDP. GDP can rise because of an inventory build, but it doesn't mean they're selling all that stuff. So that generally, when you see a big inventory portion of the GDP figures, you look for a slowdown in the next month in hiring and things like that because they've got all this inventory they have to work through.
Options 22. Mike and Bob, besides the rate hike, what are the major potential market moving reports left over the next 15 trading days? Well,
Not much.
we got CPI Tuesday. What rate decision is next Thursday? I just forgot. There's a
The Fed?
no, that's Wednesday. What's next Thursday? I forgot what's next Thursday. There's a
An ECB?
is it ECB?
It's ECB or Bank of England.
So that's next Thursday. Do not, even though it's not a report, I believe this is the biggest quarterly OpEx next Friday, the quad witching of the whole entire year. So we could get some interesting movement off of that. And then it quiets down.
Hey, Mike,
Yeah,
Thursday the 15th is both Bank of England and the ECB.
there we go.
Both.
I knew I didn't have it on my pad, but I knew that the 15th was going to have. So next week we got Tuesday, Wednesday, Thursday, Friday. It's going to be a doozy through the 16th of December.
Mm-hmm.
And then do you have a long-term calendar in front of you in case anything else jumps out? I mean, then we start really going into the holiday slowdown. I
do.
The following week is the week before Christmas falling on a Sunday. Then the week after that, you have the observance of Christmas on Christmas Monday. So it's a shortened week going into New Year's. What was
Are
that?
we observing it on the 26th?
Yes.
Um, so you do have more S&P PMI figures, the preliminaries for December, which are coming out for basically everybody. Um, those are coming out on the 20th, I believe, or the 21st. But I don't know how much those matter, going into the end of the year. I'm sorry, they're the 16th. So all the preliminary flash S&P PMIs, which are the small to medium sized businesses for basically the European Union, the United Kingdom, the Euro area, the US, all that stuff's coming out. Germany, if you look at Germany, I like to look at Germany separate. There's nothing really on the 23rd, nothing on the 22nd. 21st, Canadian inflation. I mean, Conference Board's consumer confidence in the US is on the 21st. Not much. It really starts to slow down.
Uh, yeah, it does slow down. Where do we sit? So that's it. That's what's on the radar screen. Next week is going to be the biggie options 22.
Mm.
Uh, for some odd reason, I remember from the end of World War II to about the 70s, the average was around 4%. Paying off war bonds was extremely expensive.
I'm sure you're right about that, Daniel. I don't remember the central bank having an inflation target back then, so I don't know that that's a comparable in terms of what the Fed might do. I don't, I'm not old enough to remember it. It was, like six in the 70s, 5 or 6 years old. But looking back, I can't remember the inflation target really started to be public knowledge during Greenspan more than anything, having the inflation target. For Volcker, it was more of an M2 target and M4 targets and, money supply as opposed to actual level of inflation. But I mean, inflation in the 70s was very high when the oil embargo hit. So that might have an average of 4%.
Maturity on the 30-year war bonds was set at the time to have contributed to the interest rate increases in the 70s, 80s. Too much money in the market.
That's fair.
Panv, Mike and Bob, what could be the potential trigger for the yield curve steepening?
You have to get past the recession, in my opinion. I mean, it might start to steepen before that, but that's going to be the market preparing for us to come out of recession fears. That's what it would have to be for me. I mean, you can go from negative. What would we end up at? Negative 83 today? 84?
We're negative 83.4.
All right, so then right in between the two. So to go from negative 83 to negative 30 could come in the first quarter of next year if we have, strong markets and we have strong data coming out. But we really have to put the recession fears to bed, and we have to have some sort of light at the end of the tunnel for inflation, for the inversion to re-steepen. It will return to the mean. It will absolutely return to the mean, Pavneet. But I wouldn't expect it to be tomorrow, for lack of a better time frame for you.
No, but once it really starts accelerating the upside, watch out. You can get that's when the test off subject. But what happens to someone holding a micro ES futures contract as it expires and they haven't sold it? Does it become worthless? No, futures do not become worthless. They're cash settled for those.
All right, they either take your money or give you money.
Yep, they are just cash settled. Now, if you're holding futures contracts, depend again. It's for other things like things that can get settled in the physical. It depends on your broker, but most will close you out if it can be physically settled because you're not going to take delivery of stuff. If it's just a cash settle, they'll cash settle unless you have specific. Some brokers you can give specific instructions to roll. You can say roll me into the next contract, and they will do an auto roll. Okay, so that's it. That can be broker specific and size of your account specific. I don't know specifically on the micros if any brokers are doing auto rolls.
And Mike, can you do two things for me before I go? And then this gives people, if you have any more questions for me, put them in now. Can you put up the monthly S&P, the futures, the ES? I mean, unless you
I
want to
got it
do the
right
SPY,
here.
because
Look at that.
I know. Can you zoom in to more of the recent price action? Um, your rotation zone is not up on this chart,
Well, I can put it
but
there. Hold on.
when it is, you can see a cross.
Let me do this. Hold on. Let me go to this one and just switch it to the monthly.
Yeah.
There's the road. There it is. Let me
So if
hide
you
it.
can zoom in, I mean, I know there's a lot of lines there, guys, but you can
There,
trust me
no.
that the
There you go.
rotation zone had crossed lower, and it's not really a fully formed rotation zone yet. But if it continues, it will be very hard to look away from a downward widening rotation zone on a monthly basis. It'll take months and months to play out. But you guys all know that my stance on this is that it's more likely to fall starting mid first quarter, early second quarter, which gives us months and months for this thing to maybe play out because it's 2 or 3 months. Then, if you could, Mike, the daily dollar index, DXY,
On which
just
time
show
frame?
people, yeah, daily,
Monthly.
please. Daily, please, on the DXY.
There's daily.
Going up into the rotation zone for the third time after the cross and failing at the 200. Okay. Again, not something that I'm in, but just something to look at. And I've explained to people before that a lot of the times I'm looking at these charts and I'm saying, okay, longer term, tomorrow I'm doing Yahoo Finance. Okay. And the subject tomorrow, it's at 11:30 Eastern time. I'll be on Yahoo Finance. Okay. And the conversation is what's going to happen to commodities now that China is coming out of COVID zero. Okay. And so the first thing I want to do is look at our term equity picture, which I'm looking at just to be able to answer Coco for no other reason. But the other thing I'm looking at is you look at the dollar index, and to me, it's failing, right? On a short to medium term basis. So does that mean that commodities are going to be strong or weak? Well, F China. I mean, if the dollar collapses from the 200 and collapses from the rotation zone and extends, like Mike sometimes does measurements on, it's likely that commodities will get stronger. So now I can go on Yahoo and say, I think the China coming out of the COVID policies in the short term will be a boom for the dollar. But if you extend this time frame out on the dollar index to say a weekly, you can see that you have plenty of room to move back up to the rotation zone after the daily extends. And then if you even, excuse me, if you even move it to, there you go, there's plenty of room to move back up to the rotation zone. And then if you move it even out to a monthly, we're just entering the rotation zone on the dollar. So I'll take all this information and I'll say, okay, what is the fundamental story that could make that work? Because the technicals that Mike shows you guys work a lot. They work a lot of the time. So I say, okay, well, the picture is telling me this. What fundamental story lines up with that? Then I get to go on TV and people get to say, wow, Bob, you really called that one. And did I? Or did Mike? That's all I'm trying to show you guys here.
Yep. So that's yeah. It's gonna be interesting. I'm watching for this is the next few days are critical because they're going to determine we've held the 62 and a half. So
Mm-hmm.
on a little lower, if we push down, it would be a double formation. But if we break up from here, it's not confirmed until we get above the high also. But still, I'm watching for a slightly bigger pullback and then a stronger bottoming signal.
And correct me if I'm wrong, Mike, on this one. You don't have an opinion as to which one is stronger, the 62 and a half or the 200, right? It's
This
just whichever one breaks. That's it.
if we turn up from here without breaking, we can't use any targets from a double. If we push lower, we get
Okay.
the targets from the double. But what's interesting is either trigger for a long, they just have very different targets, is the
Hmm.
break of the peak, which is right at the 200s simple. So any long now that I'm focused on is going to be, unless we invalidate everything by going to new lows, is going to be at this peak from December 7th. Because that's going to be the decisive point, and then it's whether whatever the targets will be, is what varies.
Right.
Uh, Options 22. Next question. Given reports, Bob, in your opinion, where do you think we will land on the S&P and NASDAQ by December 31st? Higher, lower, or flat from where we close today?
Oh, wow. Can you ask me that tomorrow? How about asking me that after the Fed meeting? Honestly, options, I don't know.
From
I just, my,
today?
yeah, I mean, honestly, my honest opinion was that the fourth quarter was going to be positive versus the third quarter. I would say that's more of a Mike question because it would just be price action I would look at.
Well, see, this gets, I mean, uh, whew.
I don't have a signal of
Ask
any
me if
sort.
this NASDAQ double triggers, ask me then.
Yeah.
Because right now, we don't have, or if the S&P, right now we're holding key support. Right now it still favors based off of where we're closing today. Let me see, 410. What was the high today? 39.6, or yesterday was 39.61.50, 39.64.25. We've triggered short-term buy signals. So we could easily see some higher price action. And until we break this low, then I can't go with lower price action, holding the channel, holding the key breakout levels. Now, the only thing that's triggered is the Russell. But the Russell, even with coming back down, and this was really sloppy, and this is a lower probability one because of the big hitch, as I said. I'm saying we're bullish to neutral because going in, and then it's going to just be interesting after next Friday. Depending where we are, we'll have a better thing. I think we'll still be substantially up unless we get, for the whole quarter, unless we get the close below on the NASDAQ and the S&P that trigger sell patterns. Because until that happens, I got to stick with the buy pattern until those key levels are broken. I got to go with the short-term stuff even.
Yeah.
uh where else? Gentlemen, my broker, Webull, is moving from Apex clearing to in-house. Is that a bad sign? Are they about to steal customer money?
Uh,
I I don't have any comments on Webull. I don't. I mean, I know a lot of people using them from a smaller aspect. They're regulated. Uh, are they about to steal customer? I mean, it's not the same as a crypto exchange.
right.
So that they got big enough to. I'd have to look more into it, but my first guess would be they've gotten big enough to self clear.
Yeah.
But that would
I'd
be
be
my
more
first
comfortable
guess. I
with
wouldn't
Apex
go into
clearing.
the whole thing with Webull that they're going to immediately try to steal people's money. They are regulated versus a lot of the crypto is that people are now
Yeah.
afraid of your money disappearing. That was a whole different thing.
Yeah. I will say though that I'm going to be careful how I say this. I'd be more comfortable with Apex clearing, but I certainly don't think this is a sign of the first step prior to them stealing your money.
Isn't Webull
I don't.
Chinese?
I
They
don't.
have a Chinese component. I don't know if they have a U.S.
I mean,
entity that,
they're a Cayman Islands company who has a headquarters in New York.
yeah,
I don't know who their ultimate
and that
lawyers
has
are,
to
but
be, since they have a headquarters in New York, that is regulated. But again, any futures broker, they're not FDIC insured. So
so it's I'm sorry, it was established as a Delaware company in 2017 by Wang and Quan, a former employee of Alibaba Group. Um, wow. So they opened in May of 2018. I'm sorry, they released their app in May of 2018, and they had 11 million registered users by October 2020.
Well, I mean, if you're worried about it, there's lots of brokerages that you can, or and futures
Yeah,
brokers you can change to. You know, there's a lot
they're
of
working with
huge futures brokers that are not going anywhere.
they're working with the Brooklyn Nets. So FTX had a stadium too. So I don't know if that means anything.
I mean, they had way more they have way more regulation put on them than
Yeah.
FTX ever did.
I mean, every regulator, they fall under every regulator's heading. So if they're self clearing, they've been cleared to do so. Does that mean anything? I mean,
Could
Bernie Madoff was regulated, but I'm just saying, like, it's certainly not an immediate evidence that they're preparing to steal your money. No.
No, but again, if you are concerned about that, it's not like you have one or two futures brokers to choose from.
Right.
There's a lot of very long-standing, reputable futures brokers that will gladly let you open an account with them, and
Right.
and you should be able to transfer your account.
Mm-hmm.
So, options 22 says don't roll the dice in the Chinese companies. If it was only in China, I'd agree, but they are under U.S. jurisdiction and they have physical presence in the U.S. So, but if you're in doubt, close it out. You
Yeah.
know, you can always find another broker. I mean, I happen to my favorite is Interactive Brokers, which you can trade pretty much anything through.
All right.
Uh,
Anything else for me, guys? I
let's
don't
just
see any.
see. Bob, hoping you get better before the holidays.
Can you guys still hear it in my voice? Is that where that comes from?
I don't. I or just from wishing you to feel better. I can hear you
Thank you.
sniffling.
I appreciate it. Thank you, Daniel. I appreciate it.
Uh, Powell will raise rates on December 14th.
Yes, that's correct. He
There will
will.
be no pause. It'll be a 50. It's 50. It's 50, isn't it, Bob?
Yeah,
Even if
it's
CPI
likely.
came out hotter, I don't think they're going to do anything but 50. And then February would be 50 if it was way hotter and nothing changed.
Yeah, it's
Uh,
uh, it's likely to be 50, and that's a very high probability now. It's still not guaranteed, but it's an extremely high probability. It would
uh,
be really funny, honestly, to me if they shocked the market with 75 after Powell was more measured. Boy, that'd really get the effect that he wants, but he'd probably get in trouble.
yeah, I don't think, and he's been one that's one to lay out his roadmap pretty clearly.
Yeah.
I don't think he's. It would take something weird to happen.
Mhm.
Bob, do you think housing has any crash that can occur?
I think housing prices have lower to go. I wouldn't use the word crash for them. We've been looking down here. One of the weird parts about home ownership right now is I don't want to say it's at a record high, but it's at a recent high in terms of its expense over renting. Okay, right now, and Mike, I can send you a chart if you want, that you can put up. The average spread between the monthly cost to own a home and the monthly cost to rent is up to about $905 a month. And that is a recent high going all the way back to about 2000. Like, I'm going to send this to you right now so you can put it up if
All
you
right.
want. So that tells me that housing has quite a bit more to go to the downside, but I wouldn't call it a crash. Okay. It's like a gentle sort of drifting lower. We don't have all of the, um, all of the people owning two and three and four homes. It was interesting when I was looking up consumer credit. And I was looking back at the last time consumer credit had peaked, and it was prior to the housing bubble in 2007, 2008. And the way the St. Louis Fed does it is they aggregate credit cards, home loans, home equity loans, second loans, all into consumer credit. So it's a different source of consumer credit problems right now is likely to become higher and higher credit card balances, where back then it was more home ownership. So you can see here that as we came into the housing bubble, the cost to own a home was spiking because people were buying 2 and 3 homes and trying to flip them, right? And now we're way higher than that. We're almost $150 higher in terms of that spread. So it's cheaper to rent right now on a monthly cost basis. And even though people are complaining about rents, the problem with rents is when you sign a lease, it's usually 12 months or longer. And coming in to rent a home now, the prices are lower than they were for the people who signed leases 3 and 4 and 5 months ago. But that won't go into CPI because they look at the already executed leases and they add that in. So let's say, 500 people signed a lease in August and it was at record highs. And then 500 more people sign a lease now. Okay, the average of the lease is somewhere in the middle. Let's say it was, I'm just going to pull numbers out of my ass, 4,000 a month in August, 2,000 a month now. Rents will go into CPI at 3,000 a month when they're really 2,000 a month now for new leases, right? So it's kind of screwed up in there in terms of the way they calculate it. So that's another problem in CPI. We got the girls back.
The girls are here. Housing is very strong in Florida.
Hey, Dr. M, I'm in Florida, and that's where I'm looking at houses. And one by one, Redfin sends me price drops, one after another. And part of the reason that's happening is, again, we're at a very elevated level, Dr. M. So I agree with you. They are still strong, but it's price drop after price drop after price drop. I saw the Redfin estimate for the place that we live in now, which is a rental. Okay. And it was Redfin's estimate was about $70,000 more than the two identical units. These are townhouses, right? Than the two identical townhouses a block away from me with the same amenities, and they had just sold in the last 3 months. Redfin's estimate was $50,000 and $40,000 more on each unit. So I don't know what their algorithm is doing. It's probably why they stopped buying houses, because their algorithm sucked. So yes, Dr. M, I agree with you. It's still very strong in Florida, but it's dropping, man.
All right. Not seeing anything else. Oh, great. Now I'm going to need a new graphic of Shock the Monkey.
Sterling had asked something. I think we jumped over him.
75 basis points would be Shock the Monkey. We're going to need a Shock the Monkey graphic. Sterling, that was a housing crash. The thing was talking about issues with FTX.
Okay, so we got him in. Okay, I'm done, guys.
All right. You are welcome, Pavneet. Pavneet.
All right, I'm going. Cheers, guys. Mike, if anything comes up, text me and I'll try and make it on.
Okay. All right. Thanks.
See you guys.
I am back. When will Powell raise rates? It's next Wednesday. And what's more important than when they raise rates, that will be at 1 p.m. Central, 2 p.m. Eastern, is the press conference 30 minutes later, because it's pretty much that's 50 baked in. So then everybody wants to know, are they going to continue? And there's no meeting in January. There's a meeting in February, but it's right at the beginning, I think February 1st. So there's about 6 weeks between potential hikes. So everybody will be looking for guidance to whether they're going to step it down again from 50 to 25. That will be key, or whether they're going to go 50-50. That's what's going to be key, or how dovish it appears. So that's where we sit with that. What? There is no. Well, there are. I will not. I'm not going to be one of those people that say there are no stupid questions. That is not a stupid question. That is not a stupid question. Uh, Duck falling from the sky is sort of stupid, but your question is not stupid. When we see the dollar index, it's not pegged. You have every currency at a floating exchange rate. I think you're asking, how do you come up with a dollar index? There's weightings. Okay, you can look up dollar index weightings. So the biggest weighting is the euro. Do I have all the weightings in front of me? No, I do not. I do not have them memorized because that would be silly. If I just do a quick search, dollar index weighting. Let's see, here we go. I'll trust, even though you can't always trust it. Oh, stop with your little advertisement. I think this, I know that's roughly correct. So you have the euro at 57.6 weight, the yen 13.6, the pound 11.9, the Canadian dollar 9.1, the Swedish krona 4.2, the Swiss franc 3.6. All right. So that's how you come up with the dollar index. And then if you're doing the futures, which are traded, they're the future contract based off the dollar index. So there you go. Not a stupid question. So you're Surfside near Miami. Wish I was at least in Florida for them. You're welcome, Dr. M. Oh, Smoking Scarlet Fire. Yes, I know that show, 5877 Cornell. That is a very good Scarlet Fire. Is an excellent Scarlet Fire. I think PPI and CPI will come in hot. Prices are still rising every week in the grocery stores. They could CPI could still come in hotter. I think PPI might still come in line. Remember, tomorrow, and I don't know, unless PPI comes in really unexpected, especially if it comes in hotter, I don't think it's going to move that much. It's forecast at 0.2% on the core and the headline month over month. What the market will more react to is, let's say it comes in 0, then that will be a sign of inflation. They'll take it as inflation easing more, even from a producer price index, which means that the Fed can go on pause or stop with the more aggressive rate hikes. So the market would probably rally more if it comes in less than this. Unless it comes in, I mean, if this came in at 0.4, 0.5, yeah, you could see a hit to the downside. But if it comes in 0.2, 0.3, and even 0.1, but something that varies by more than 0.2%, I think definitely could be in play. I don't know if the PPI will come in that hot. If something was going to come in hotter, I think it would still be the CPI. All right. Where do we sit? So %B buy signal triggered today. Intraday, little run up here. So that's where we sit. I'm still utilizing this 39.55 as sort of the pivot point. On a move up tomorrow, remember it comes out an hour before the open. I will be utilizing the harmonics. So minor, right where the 50 is on the 4-hour now, since we've stalled out exactly at the 4-hour rotation zone on the closing basis. On a break up, 39.8875, and my major area is about 4,007 to 4,018, with the key pivot point being 4,013. which is the 50% decline. On a breakdown, this two bottoms are key at the 50. So that's support. If it does break back down, that is support. The only ways I can get bearish is if we break that with momentum or if we break and retest with a rollover. Now, I am watching this because cycles still at the top on the weekly, but now at the bottom on the daily. So we could easily have another cycle in play. This is critical, though. With this 39, 11, 39, 14 area, the NASDAQ triggered a percent B, triggered an intraday double bottom, and stalling out at the first harmonic. So this is going to give me tomorrow something to watch. Why will I watch this? Because if this gets invalidated, then I have some warning sign that we could be going to retest these most recent lows. So that's on a closing basis, that's 11,521. On a trade through basis, that's 11,488. Okay. Other than that, I have to stick with this. Also did a daily percent B and's got a double in play. Yes, it has confirmed but not triggered the double top, which was sloppy. So if we do roll over on those numbers and start breaking below this 11,465 with momentum, then it could be, from my perspective, we'd have a stop out on a percent B, a stop out after the first target's hit on the double, and I'd be looking to go the other way at least through tomorrow. The Dow, interesting enough, did not trigger a percent B. So my still resistance is 33,770, support 33,470. Russell, there was some pretty aggressive selling in here today. It ran out, broke up, and then it came back down and actually closed. It closed up for the day, but it was a substantially weaker close. Now, the Russell's the one that formed this sloppy double top, and there's this extra hitch in there. So it's definitely of the lower variety, but I am utilizing these for breakdown targets because that is now the weakest one. You notice also the divergence sort of. Yes, you see the Russell was only up 65 basis points, while the NASDAQ, and those were the two weakest, but the NASDAQ up 118 basis points, the Russell up only 65. The Russell still sitting below the 50 and has triggered a bearish pattern. The NASDAQ is still clinging barely to support after confirming a double top but not triggering it yet. Notes: the double is still technically barely in play. Inside bar today. Remember, on a rally, the major topping area I'm watching for, and is that to do lows? No, I think the lows might be in on the notes. I'll trade whatever pattern appears, but the lows might be in 115.14 to 117.01 is a topping area on a rally. I will then watch for a rollover play, and then depending on where we find support, will tell me a lot of how to position it for next year. Dollar index, which we already talked about but didn't go into in depth, dead back to the 62.5 with no close below it. Cycles are at the top. I am actually watching tomorrow, especially if we get a rally after the PPI, for the dollar to pull back and possibly make a stronger bottoming pattern going into next week. But without the only short-term thing besides a little short-term breakdown play would be a move back above 105.48 based off of not being able to break that 62.5. The VIX outside day reversal and filling the gap from the 6th, but no new great setup in there. Crude, no fantastic setup, but cycles at the bottom right now. So I'm watching for a short-term bottoming formation to occur. There's just not a strong one yet. Where do we sit? Bitcoin rallying back, but still caught in this horizontal channel. So Bitcoin will probably go the way the markets break tomorrow morning. Tesla, after closing back below the 62.5, found some key support just below the 87.5. So yes, this is technically a double bottom, a long way off from triggering. But for the point of what we will watch for, it is technically there. Just let me check in on a couple stocks that I am keeping an eye on. So Costco, interesting enough, it will miss. Costco, a double miss. That is very interesting. Still holding up pretty well, but that is very interesting from a consumer perspective. Is the consumer, remember, and Costco said they weren't going to unwind their price increases because they've had their suppliers are not easing up on the price increases, and they have a huge labor component that's been price increases. But now what's Costco going to have to do with that miss? Is the consumer tapping out? Costco being, the wholesale club. That's going to be interesting foreshadowing possibly for going into next year. Restoration Hardware, the high end. I thought this was today. Yeah. I don't know why it's not updated, but they obviously didn't give bad results unless there was a reason it wasn't released. I'd have to do a search for it. But they're up slightly, but they should start having more of a slowdown with housing also. Lulu was a big miss, even though they beat. I think, did they do guidance lower? Because this was a pretty big drop back. It was projected at a 9%, and it was actually a 10% drop, and that's taking it back. So I'm going to be closely watching this 349 level, pretty much where it's trading right now. Why is this level key? Because I'm going to be watching this to hold support. Then there could be a short-term gap play to the upside. Prior breakout area didn't quite make it back to the 87.5, and then the gap down to the weekly rotation zone. So how does Intel look? Nothing's much really changed. I'm still watching for a pullback in Intel. I am still watching for a pullback, but there's no great buy pattern yet. So would not be surprised to see, and this is now getting into overhead resistance in Intel. But if you're looking for a buy, I'd be watching back down from my perspective. Even on a slight pop, you're going into consolidation resistance. There's just nothing. There's no great setup. Anything gold, going for gold or copper. Gold still holding up. Gold not yet in double top territory. I'm still going to be watching for a bigger rollover play in gold and then another buy setup. However, if the dollar index breaks to new recent lows, there will be a stronger continuation play. Gold on any of these things, there was a little rotation buy here, but no % B buy. but I am watching for the rollover sell. Copper is still holding after triggering the really big double bottom on the weekly perspective, is still holding, still watching for higher prices in copper. Nothing has happened to invalidate this. And remember, just as the crude, remember the crude weekly double top has been a longer term thing. This is a longer term thing. If you're watching anything on the shorter term, these two lows that formed this little mini double bottom, which was the great continuation play after the pullback, that's about it. If you're looking for, hey, is it going to pull back again? Yes, technically, you have a little mini double top, but that's not a big pullback, and it's not triggered. Seems like the high-end Macy, etc. are on beats, and the budget brands are missing. I think the low-end consumer is really tapping out. We're seeing the credit card usage is literally ramping up super strong again. And remember, inflation hits the middle to lower class a lot harder than it does the upper class. All right? So that would make sense that some upper end brands have more sustainable pricing power, but things like your Walmart, which they threaten due to shoplifting, and they might have problems passing stuff on to the consumers, your Walmarts, your Dollar Trees, your Dollar Generals. And Walmart was talking the other day, their CEO, it's been even on CNBC, but the interview was interesting because, hey, we're getting all this shoplifting with woke prosecutors not prosecuting anything. We're either going to have to raise prices or close stores. If they are unable to raise prices because the lower to middle class consumer is tapping out because they're tapped, then what are they going to have to do? Their only other alternative is to close stores, especially in the higher crime areas, so they don't have to pass broad price increases back on. So that's, I think, also what we're seeing. So keep an eye, on things like Walmart, which has been rolling over again. Keep an eye even on your Targets, because Target's been talking about increased theft also. And when does increased theft happens not just because of the non-prosecuted people who are like career criminals, but also if people are running out of money, they're more likely to possibly stick a couple extra things, try to get hey, maybe it's self-checkout, I can get away with a couple extra things that I didn't run on the scanner. I need to feed my family because prices are so much up. You could be seeing that kind of theft for people who aren't career criminals, saying, I need to try to get away with something. I can't keep running out of money. So I'm keeping a close eye on these things like Dollar Tree, Target, Walmart, to see if we start really breaking down in them. Dollar General. And that's not just for the near future. That's going into especially next year. All right. Getting harder to pay my credit card off every month. Stuff is, look, our food bill and the dog's food bill has gone up a ton. Dog food has gone up a ton. And when you got 5 dogs, it's substantially noticeable for me. So I guess I can't keep feeding the dogs filet. That's a joke. They still do to get ground beef. I can't keep feeding myself filet unless Costco cuts their prices. Only one sausage egg McMuffin instead of two, even with the 2 for $5 break. See, it's starting to affect people. This is why I love running this channel. You get feedback. It's really starting to eat at people. At least there's some relief at the pump, but you know, the food you have to eat, and food inflation is not going away. It keeps creeping higher. If there's a crime spree, will it show up on the PCE? It's either the CPI or the PCE, and no. Well, if if things have to raise prices because of the crime spree, yes. The end products, yes. It will show up more on the CPI. It's just all interesting. Bacon is out of the world here. The same pack I used to get from Costco, that used to be $12. I didn't buy it the last time I was there. I'm like, I should buy some bacon, and I looked. It was $18.95, up from $12. And that's a pretty substantial increase. And when I went just last week, the eggs I used to get for $6.49 for 18 were up to $8.59, and they're also limited to 2 per person. Ugh. Barbara sent me an email wondering where I've been. My wife's cutting my hair. I cut my own hair. I haven't seen a barber in forever. So with that, I have a bunch of dogs to walk who have been waiting patiently for me to end the live stream. My wife is she's hosting for her team because she's in charge of strategy, development, and finance for IT in her division. She's hosting her divisional Christmas or holiday party tonight. So it's me and the dogs. So there we go. You are welcome. I will be back tomorrow morning after PPI numbers, and we'll see how we'll finish off what's going on in Chicago. Well, maybe somebody's stealing all the eggs. Trust me, I don't want to be in Chicago. Trust me on that one. But that's what it is. 2 packs of eggs per person at Costco. So, all right. I shall talk to everybody tomorrow who can tune in. Thank you for the extended show, and I will be here back tomorrow. I'm working on getting out of here. It's not as easy, especially now. All right. Bye for now.